AI is a bubble, tech's doomed, the market's gonna crash. I know you've heard these arguments a million times before, but Nvidia completely dismantled this argument in their third quarter earnings. I'm Terrell Higgins, and in a world filled with information, what you're really looking for is transformation. In today's video, I'm gonna be breaking down why Nvidia's third quarter earnings cements that this isn't an AI bubble, but the beginning of an AI revolution. Let's get into it. So the first thing, let's talk about the argument of why it is a bubble. So there's circular financing. They're saying there's not enough use cases. These businesses aren't generating real revenue. Their hardware is going to depreciate too quickly. That's kind of the gist of why people think AI is in a bubble right now. But Jensen Huang, the CEO of Nvidia, actually dismantled every single one of those arguments in his third quarter earnings. So you might be thinking, the economy sucks. How does that relate to the stock market? And I mean, you're right. The economy is not in a good spot. We've had bad jobs data. We just came off the longest government shutdown ever. There's rampant inflation. We're still at war all over the world. We're not in a good spot. But the stock market doesn't care about consumer sentiment. It actually is a reflection of what the forward earnings for corporations are. So even though that the overall economy is bad, the forward earnings for these large tech companies are very, very good. And Nvidia, for example, which is already the biggest company in the world, they actually were able to grow their revenue from the second quarter to the third quarter by an additional $10 billion. They clocked in $57 billion of revenue for their third quarter. They revised up their guidance for the next quarter and for next year. They're expecting another $350 billion between now and the end of 2026. And the biggest thing that they say is driving all of this is an insatiable demand for AI compute. They need it on the pre-training, they need it on the post-training, they need it on inference, and they need it across industries. They actually laid out a bunch of different use cases in medical, in self-driving, in robotics, and obviously the obvious ones in OpenAI, Anthropic, all these chat bots, Meta using it on their ad revenue, Unilever using it to generate content. All these companies are showing massive gains in their profitability and their efficiency. And the thing that I thought was the most interesting about all of this is that Nvidia has 74% margins on their business. So they're generating so much cash that they need to do something with it. So I'm sure you've seen this circular investing diagram. It kind of went viral on the internet. But the reason that they have these circular investments is because they're sitting on a mountain of cash that's just going to continue to grow. So if they're going to try and drive real value for their shareholders as the biggest company in the world, there's only a handful of ways you can do that. So they're going to buy back shares in their company, which is going to drive up their stock price. And then you could issue dividends, but that's not really going to drive up the stock price. So they're investing. They've essentially created a venture arm where they're buying into these smaller companies with the potential for growth. And it's kind of creating this virtuous cycle for the company. These are Jensen Huang's words, not my words, but he invests in these AI companies. And then they end up investing way more into Nvidia hardware. So he puts an investment on the table, gets an equity share of the company. They get brought into the Nvidia architecture, and they continue to invest moving forward. And as enterprise clients see the success of the other clients, they jump on board and the investments continue. So that is kind of why you see these circular investments, because they have to do something with all that cash. They can't just sit on billions and billions of dollars. And I think what was very telling about this earnings call is the A100 GPUs, which are almost 6 years old now. They are still being fully utilized. Just because of how Nvidia's architecture works, everything is backwards compatible. And as they're updating their software, those old pieces of hardware are still useful. They're still integrated into the system, and they have a useful shelf life that's well beyond the 3-year window that most people are forecasting. So what is the takeaway here? So the demand for AI is insatiable. Nvidia is growing 60% year over year. All their clients that are using their hardware are improving efficiency and growing their profit margins. So we're in the early innings here. It's not the end of the AI road. ChatGPT just got released 3 years ago. I know it doesn't seem that way, but it's only been 3 years since ChatGPT was released by OpenAI. So it's kind of hard to think that the final version of AI is just photos, a few chat responses, and 8-second videos. Eventually, AI is going to get to the point where it can generate full movies, full video games, full programs, full businesses. And that's just what they're working on. That's where all of this is headed. We're still in the early game for these AI companies. This AI build out is going to continue. And if you're sitting on the sidelines waiting for this whole thing to crash, then you're going to be waiting for a while. So I'm not giving you investment advice, but sitting in cash, getting eaten alive by inflation probably is not the best decision. And if I shed some light on this AI market and the market conditions we're in right now for you, like and subscribe to the channel, share it with somebody else, because I'm gonna be transforming your finances every single week. And the YouTube algorithm thinks this is the next video you should be watching on your transformation journey. Thanks for tuning in, and I'll catch you in the next video.
Today, we're announcing that the Department of Energy is partnering with Nvidia to build 7 new AI supercomputers to advance our nation's science. AI addresses the segment of the economy that IT has never addressed. Having AI that augments labor is going to help us grow.